In today's video, I'm going to be going over my ATR Breakout Strategy. If you watched my previous video on this, it's been a few weeks, a lot more backtesting, a lot more bouncing ideas off of forums and in my Discord. I think now it's at a place where it's pretty sound and all set. So that was kind of the first video was the beta version, and this is the official ATR breakout strategy that I think any scalper or day trader can benefit from, especially in options. I kept saying how easy it is. It's the most simple strategy I've ever come across, but I think that's all just relative. I mean, if you can grasp it and you think it's easy, I think you can definitely benefit from this as it's extremely accurate. And after making several changes, this strategy is producing around an 89% win rate. Now, it's extremely conservative, but when it does provide a signal, it's usually spot on. So just very, very quickly, I'm going to show you kind of how I came up with this and the bones of these studies to kind of explain how it all works. So what I have up in front of us is Apple's daily chart, and the study that's on is Thinkorswim's default ATR Trailing Stop study. So I didn't make any changes. This is exactly how it comes. And the way it works, it's pretty simple, is based on its true range, which is just the amount that a stock moves in any given period, which is generally 14 periods. So essentially, over 14 periods, a stock moves, say, 50 cents or $1.50, depending on the stock. Well, it keeps that value in mind on this trailing stop, and whenever it breaks outside of that threshold, it wants you to change your trade, your direction. It wants you to go from short to long or long to short. So whenever it wants you to be short or thinks you should based on the ATR values, it'll paint a line above market price, just like you see here. Because if you're short, your stop would be above price because that would be your reason to get out of your short. And whenever price, so once it closes below this blue line, it initiates that short position. This is short. And it'll stay in this short mode until price breaks above it. So you have just been stopped out of your short position, and now it initiates the long position, which is the blue line. Long. And as you could guess, your stop out is below price for your long position. And you can see how accurate it is or how useful it can be. Because let's just say that this was your buy signal. Like, all right, I want to buy it as soon as ATR trailing stop switches to a long position. It is based on its true range, right? I mean, it's just statistics after all. It knows what it normally moves, and it's making an atypical move. So therefore, it thinks it's going to change direction or shift in momentum or sentiment. So, like I was saying, you can see how accurate it is because if you were to buy here and use this as your stop, you would be killing it because you could have effectively rode it from, 136 all the way up to almost $200. I mean, this is a daily chart, but never once did the ATR trailing stop say to go short or to stop out until the very end. See the one little purple dot? That's that it is now suggesting a short position. But you can see how big this gap down was. So it stands to reason that it has made a big move to the downside, unlike it has been doing. And therefore, let's go short. And it'll go down, in theory. So after pulling up several charts, I mean, I'm talking not even several, I mean, 50, maybe 60 charts, just daily chart after daily chart, weekly chart, 4-hour chart, whatever, all long-term charts. And I was just thinking to myself, every time it changes, what if I bought there? And just like you see, it's rarely wrong, right? I mean, there are false signals, of course, but it's rarely wrong. I mean, like here, for instance, it closed above the pink line, so it initiated a long, and it did get up. I mean, this is a daily chart, so that's probably a pretty healthy move, but it shortly thereafter fell down. And what I was getting at is not only did it not initiate a short position, or did you not hit your stop? Like I said, you would have held through all of this until here. So, and look how accurate that is. I mean, look at where price hit, almost down to the penny right here. But it knew because it knows what it typically moves. And this line is the end of that movement. It's like, okay, it shouldn't go past this because that's what it normally does. And that's exactly what happened. And anytime it breaks without that, outside that realm of normal, it changes. So after viewing all these long-term charts, I was like, you know what? I'm going to try and figure out a way to day trade with ATR trailing stop. And I never heard of this before. Average true range, of course, is a very popular tool, but using the ATR trailing stop for signals, I'd never heard of it. I just started playing with values, and I used the trade ideas back tester, and after weeks and weeks and weeks of research and changing and editing, the final outcome, which is the setup you see in front of you, was about an 88.8% profitability. So almost a 90% win rate, which is incredible. Now, it is extremely conservative, and like anything, you do get false signals, but if you follow every single rule, it's very hard to not make money with it with proper risk management, which you will have if you follow this strategy. So what I'm going to so first off, I'll kind of go over the basics. So we are for this strategy, we're going to rely on a 2-minute chart, a 5-minute chart, and a 15-minute chart, in addition to this chart up in the top right. And I'll explain every little piece as we go. So first, I threw it on the 2-minute chart. I played around with the parameters. Clearly it's not the same as default. Instead of an ATR period of 5, I made it 9. Instead of 3.1, I made it 2.5. An average type, I made it exponential. I changed it to a line instead of the dots. I hate the dots. The width to 2, and I did the color in this dashboard style. Green is go, red is stop. Now that's the 2-minute settings. Each time frame has its own setting for ATR. They're very, very slight, but they are different. And so for the 2-minute chart, I kind of reviewed all the signals and tested it, even tested it live, which I rarely do unless I get some, positive feedback or good back testing results. And it was good. It was fine. I mean, it was similar to how I was trading before. It was actually pretty good, but there was a lot of false signals, especially in a 2-minute chart. That's choppy. The ATR period isn't looking at that much data. If it's only looking at 9 candles over 2 minutes, that's 18 minutes of time and data that doesn't really provide a crystal clear picture. So then I said, okay, we have to match in the 2, the 5, and the 15. And this chart will show you a little bit better demonstration. Okay, so if we look at the cues here in the middle, the left chart is 2-minute, the right chart is 5-minute. So this is actually today, 8/4. So what we want to do is anytime price crosses green, so this line, we initiate long or bullish context. So now the cues are above the green. This is bullish context. This is technically a buy symbol. But now we want that same signal on the 5 and the 15. So the 2-minute chart, it closed above the green. You have to wait for the close. It closes above at 10:30 a.m. 10:30 a.m. on the 5-minute chart is right here. So now all we have to do is wait for the 5-minute to show us the same thing. That would mean the 2 and the 5 per ATR are saying a big shift in momentum is coming. This is outside the norm. This is atypical. So that is not only is just one layer of ATR trailing stop sufficient, adding a couple more layers just pushes that favor, just stacks your deck that much more. So the 2-minute closed at 10:30. What we would do now is just wait for the 5-minute to also make that close above. At 10:50, just 20 minutes later, we get the close above the green line on the 5-minute. Now the 2 and the 5 are in bullish context. It is saying you should be long. And that's 2 separate values. That's 2 separate time periods, 2 separate sets of data. Now, to make it even further push that conviction in our direction is I added the 15-minute, but I really only care about not so much price action. I care about a study like the True Momentum Oscillator, the TMO. This study tracks delta in price and therefore is very accurate, very reactive. So I want to see the same signal in my 15-minute TMO that I see in the 2 and the 5. To make it simple, I want to see it be bullish in the TMO at the same time. So if 2-minute closed at 10:30, next I would wait for the 5. The 5 closes at 10:50, and all I would do is just make sure. Let's hold my cursor at 10:50. Well, it's a 15-minute chart, so that occurred here. And if you look on my 15-minute chart to the right, you can see my horizontal line. It was green then. That means all three agree. My 15-minute, which is a broader scope of things, right? I mean, that's That's a pretty big time frame, especially for a scalper or a day trader. I know swing traders are probably rolling their eyes right now because they look at weekly and monthly, but 15 minutes, that's a pretty decent amount of time considering you're only in a trade for a few minutes. So that's when we would take the trade. And if we did, it'd be a perfect trade because we would have entered right here on the 5 at 1050 and we could have rode it all the way to 378.08, from 376. So almost a full $2. And in short dated options, that's extremely lucrative. Now, for the type of options I buy, I never do zero dates. I think you should avoid them at all costs unless it's a lotto, and do 1 to 3 days out. I generally do 1 day out. Kind of depends on what mood I'm in, or how the stock market is, but I generally do 1 to 3 days, and I do the first one out of the money. So if this is my option flow, um, and say I just got this signal here to go long, I would, under here on the long side, I would go with these 447s, except I would do the 7th of August. So yeah, 447s because it's the first one out of the money. That's how I would do that. So not terribly complicated. Now just a couple of other caveats I have added. So I mean, when I first started trading this thing, I couldn't believe it how accurate it was. I mean, it's just hard to be wrong when it only gives you a couple signals per day, right? But there were a few times, especially in the 2 minute, because it's a lot more reactive, that it would give a false signal, just like close above the green line for just 4 minutes or something and fall right back down. So in order to prevent any false signals, I have placed an ADX label on the 2, the 5, and just the 2 and the 5. Even though on my main chart I also have an ADX label on my 15, but I can show you that in just a bit. But now I've added ADX because, as I'm sure you know, ADX is just how strong is the trend, and that could be up or down. Anything above 25 is considered trending. So therefore, if this ADX was like 11 and I got across above, and my TMO was green, if they were both pretty low, like 11 and 12 ADX, I probably wouldn't take the trade. I just can't trust it. The trend is barely there. Now you'll start getting good at reading your charts and maybe even ADX, and you know what? Maybe if you can see that ADX is rebounding some or it's caught a bottom and is now trending up, even though it's low, it's trending up. That could still be a perfectly fine candidate to go long too. So you just want that bullish or bearish context in the 2, the 5, the 15, and you want ADX above 25, preferably on both. And again, if it's 21 and 23, I'd probably take it. I mean, it's close, but that's sort of at your own discretion. Now, this chart that we're actually looking at is actually my quote unquote watch list. I keep this up on a separate monitor, and this just lets me view other tickers. Like this first row is Apple, so Apple 2515, the Q's 2515, and SPY 2515. I mean, these change all the time. I'll throw in Tesla, Amazon. I try and stick to the S&P 100 or even the indexes themselves. But this is actually the chart that I have up now. This is what I trade off of. And I will share what's happening? Sorry. And I will share a FlexGrid link. So you'll have this exact setup if you'd like it, including all the studies. I'm not going to bother too much with the setups like of every setting because you should have it already if you use the FlexGrid. Um, but really, the 2-minute ATR is 9, 2.5, and exponential. The 5-minute is 9, 2.1, and exponential. And the 15-minute, should you just to have it up, is 9, 175 exponential. And again, you really just want to look at this because if you wait for the 15-minute price action, that move is going to be spent. It's going to be mostly done. There are times where the 15-minute will signal first, and then you're just waiting on the 2 and 5. That's perfect. But just know I've had just as well success with just the TMO than I've had with the price action. But there's a few more little nuances to this strategy I'll show you on this setup. So like I was kind of hinting at before, here's the ADX on the 15-minute, just another. It's all about an edge. Every trader needs an edge. You won't win without one. Some institutions have algorithms and computers that can trade in blocks bigger than all of our portfolios combined in a millisecond. So we just need the slightest edge, whatever it is. Maybe some people like low floats and they know how they bounce at certain levels, and they know as soon as it crosses the 21 EMA on the daily chart, it usually bumps up a couple percent the next day. So every little aspect of this strategy is just one more inch of us pushing the deck in our favor. So what I've added is this 1-minute chart, this options chart, and this active trader. This is the most important part of this chart up here, is this 10x label. What this 10x label is every time frame and its corresponding DMI reading. So what I mean by that is the 1-minute is bearish per DMI, 2-minute is bearish per DMI, the 3, 4, 5, 10, 15, 20, 30, 2-hour, 4-hour is all bearish. Orange means it's in chop or flux, and green means it's bullish. And this is on a 1-minute chart. That study will only work on a 1-minute 30-day chart. And this way this is another way you could trade is 2 and the 5 match, long, short, whatever it is, and look at the 15-minute label. Does it match your thesis to go long or to go short? Is it green or is it red? Well, that could suffice to take the trade as well. This is just a DMI chart. I personally just like to view it. I like to visualize DMI. DMI has always been my personal favorite indicator. It's very, very accurate. I know a lot of the books I have read, that's always like the leading indicator in terms of trend. Because if you have like a bearish signal, like right now the 1-minute is saying it's bearish for SPY, and here's DMI, and it is bearish. So that makes sense, but you can see how bearish. The further apart the lines are, the more bearish. And see how they just widen like that? That's an indication that momentum is picking up. The wider they go, the stronger that trend. Now, if red is on top of green, it's a bearish trend. If green is on top of red, it's a bullish trend. Like it's been bearish for quite a bit. But here's a good, here's a bullish trend here. And then this blue line is just a custom study I threw on, is the ADX trend strength. So that just shows me the ADX for the 1 minute. I just figure, I don't know, I love ADX. It's a great tool. It tells me how strong it is. Well, that's the blue line. So you can literally see what the trend is doing in terms of strength. Like, let's find a spot. Here we go. It kind of popped up pretty big here. It looked like it was in pre-market, but you can see, so right where I'm holding my cursor here on the 2 minute, if you look in the top right chart, you can see that's when the ADX line gets the real high there. I mean, it was like a reading of almost 60 if you look to the right. So ADX was almost 60 right here. And that's because it was just falling and falling. And the whole time it's falling, if you follow my cursor on the right, you can see ADX is climbing, 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 climbing. And as soon as it bounces, what does the ADX start doing? It starts falling because it's no longer falling. The price is no longer falling. It is now going up. So therefore, a new trend is being born, and this trend is no longer that strong. So that's another way you can kind of use that and visualize, change in directions or bounces. Like if I can see a bounce, like if this all of a sudden, has a nice whip to it and bounces up, I can assume that this direction is trying to stay that way. Now this first chart is linked as red, as are the 15, 2, and 5. But this next one down, this is my options chart. This is linked yellow, and so is my active trader. And I'll show you why in just a second. So when I have my options up and I see an opportunity to go long, what I'll do is I'll just, go 1 to 3 dates out, one out of the money. I right click and I hit send to yellow. I never really see this discussed in videos. I'm sure it is somewhere. It's actually just something I found out poking around. So, but if you know a faster way, perfect. But this loads it into your active trader and you get a little option chart above it. There's even a great study up here for target and stop, just based on ATR. Of course, ATR is the best. Pretty simple. If I were to buy a contract right now, if I hit buy market, this label would change to say target of 160 and stop of 130. Something like that. That's 2 to 1. So when you do go to buy a contract, say 1, this will change. Well, whatever it is, if it doesn't fit your risk criteria, which only you can tell. I can't tell you what your risk tolerance is. That's totally up to you and your portfolio. Just go in and change it. Change the parameters. If your stop is too conservative, make it less. If your target is too aggressive, make it less. And play with it. It's a great tool. It can help you determine profits and stops at a glance. It's a great study. I have a few others on there. They obviously aren't all required, but and then the spread label. This just tells me whether or not I can mark it in. If the spread starts getting real wide, like 10 cents, 12 cents, that would just be silly to mark it in because you're going to get filled at 12 cents above what you wanted. And that can greatly affect profitability, obviously. So when the spread is real tight with 0.01, I'll usually mark it in and know that I'll get a pretty decent price at least. I mean, it doesn't take up any resources. I got the room, so I like to have little tools like that. Active Trader, I'm not going to go into because, well, for one, I actually have another video on it. So if you want to learn more about OCO orders or any of that stuff, but you should get this same exact setup if you use my Flex Grid. Now for we discussed the 15-minute. I kind of just rely on the TMO. This is ATR. Don't really worry about that if you don't want to. But just know that as it's climbing, volatility is increasing. So it's essentially just providing confirmation for a move. So if a move is heading either up or down, this doesn't tell you anything to do with direction. So this has a pretty decent sized move down, and you can see ATR is climbing up. That just gives you more conviction of the trade. This actually shouldn't even be on there. I always have a random study in the 15-minute. I'm always trying out or something. But anyway, that's the 15-minute. For the 2-minute, the only thing we haven't really talked about yet is how I stop out. Now, one, you can either use this study over here based on ATR multiples, which is the way to go. And this way, a different way, but you'll still be using ATR multiples, is this lower study, ATR Trailing Stop. Now, this probably won't be the settings when you go to open the shared link, because I've just been doing some further back testing with the stop out method, but pretty simple. Let's say we did make that long trade here, closed above, price just kept going. What you can do is, I'll set this to where it's probably going to be for when you get it, you, the listener. So essentially, you stay in the trade as long as it's green. And again, this is based on average true range. So say we went long here, crossed above the green, we went long. We would be staying into the trade until it turns red. So right where my cursor is where we would stop out. Due to this big red candle, per ATR, it is saying this is atypical. Let's get out. And that's all it is. You can use this for shorts, but it would need some tweaking because it's just the way that it's set up. I mean, in theory, you could use the green and the green for the stop out for short position, but it doesn't quite work like that. You'd have to, I know a guy that has this doubled up and the colors are opposite and one's long, one's short. You can kind of get creative. I'll leave that up to you. This volume study here, it's a custom study, volume study, and it's very, very powerful. Can do all kinds of stuff. Has cool labels, like the current bar. You have a 9-bar average and a 21-bar average, and they are painted. So when one of the averages is mostly selling, it'll be red, and when the has mostly buying, it'll be green. So you can kind of see. It's because there's an orb study there. Let's see. You can kind of see that like when both averages turn red at the same time, you can kind of expect to follow through in selling off. Now, always remember that moving averages are a lagging indicator. It's what happened in the past. It has nothing to do with what's going to happen in the future. Now, it's kind of the old objects in motion tend to stay in motion, so it is a valuable data, but it's not necessarily spot on. But it can kind of show you a good indication. Like here's a good example. Bulls were winning as indicated in both lines being green, and then all of a sudden both averages went red right at 1328, and we had a pretty wicked sell off, which is right where our stop engaged as well. So there's different things like that. This volume study also shows relative volume spikes, like these dotted lines. So anytime there is a spike in relative volume, you'll get it printed with a green line. Like, it looks like here was a big old sale here. Wow, a lot at the end of the day here. But all of that can be turned off or on, all your preference. What I really like is the 30-day average, especially with stocks, not so much ETFs like SPY, and then this is the average percentage. So if the 30-day average was 100K and today they're trading at 50K, this would be 50%. So this is currently 13% above average. On average, we do 71 million shares, and we've done 81 million. So it's 14% over. Look at this nice close below into a beautiful short move. The MACD on the 5-minute, is what it is. It's always great to have a MACD up. I always liked it on the 5-minute. I've had success with it. And then in conjunction with the MACD, I have a squeeze label. Pretty self-explanatory, but when it prints blue, those blue dots, that means that a squeeze is initiating or is engaged. Um, it's not often that I see the squeeze dots and it makes me change my behavior in any way or trades, but it's good to have up, I guess, but you can also turn that off. You don't even need the MACD if you wouldn't like. There's also this DTR and ATR label up top here. This is pretty interesting because actually I never see it this high, but the average true range, which if you can't tell by now is like my favorite study ever, is $4.13 on average on a daily chart. On a daily average, SPY moves $4.13 a day. Up, down, doesn't matter. But today, it's moved $6.63. So, we're 60% above average, which is a lot. And as it approaches 100% of its average move, that's, sometimes when day traders consider a stock, like maybe the risk to reward isn't so great because it's already made its average move. So there's another little aspect of this that may help you. Just trying to think of anything else. The last thing I'd probably want to bring up is, let me see if I can find an example of it. It's not the best example, but so you kind of you want to play the break in whenever possible. Like here is that perfect example. So here's 731. Let's get this one on 731 real quick. Here's a good example of when we got to close below our red line, closed way down here. And it, again, I'm not saying you couldn't profit from this because there is a tiny little move, just would have had to been quick, but then bounces right back up. Now, what I think is more than likely there was a low ADX here and this trend just didn't follow through because it was so weak. Now, this ADX label is referring to today, so don't mind that. But what I wanted to bring this up is because what you want to do is, okay, we closed below. We're now in bearish context, right? As I keep calling it. Then you'd wait for the 5. Well, the 5 happens around the same time. So the 5 is in bearish context. But what you want to keep in mind is sometimes, maybe not so much in this situation, is the actual break. So I'm drawing a line extending that red line. So we broke below it, but then we got back above it. So if I'm deeming that this is in bearish context and I'm waiting on the 5, if the 5 gives it to me, say here, and the 2-minute is above the line, I wouldn't take it. I know I keep saying this is bearish context, but just be mindful. It more than likely is coming. It's just this might not be the best entry is all, because that break is the big move. It's just like breaking VWAP. It's just like breaking a trend line or a moving average. So if you buy up here, no biggie. I mean, in fact, you're going short, so you would have a great average because it's up. But I think the safest thing is to wait either when it's a lot closer to the line or a close back below. Now, and actually, it winds up doing a short long signal, which this would not be a trade. I mean, it was a short period, but the 5-minute never agreed, so we would have never taken that in the first place. But then we got to close below at 11:22, and then look at this. The 5-minute closed below. We went back up the line, which is here, and then right here we closed back below. And look where that is on the 2-minute. Very, very similar. So therefore, they're both in bearish context at this point, 11:22. And we would take a short position. And then that's a good move. So I believe that's everything. I also have a right side of this setup, which I will slide over. So on the first layout I was showing you, on the far right side, there was an options chart and those 10x labels are up top. Well, that has all been pretty much duplicated. So now this options chart will be blue and the active trader will be blue. And everything else is red. This is my long-term stuff that's on the right side of the screen that you can't see. It's a widescreen monitor, so I can only record half of it at a time. So I'll also share this link. This will kind of be the long-term trends. But I set this as blue because, and if you remember, like I'll kind of put them on top of each other so you can see it. Here was the yellow one, option chart yellow, active trader yellow. So what I'll do is I'll usually send my calls. I'll usually go calls, send to yellow, and then puts, send to blue. And then that way, this obviously isn't on top of each other when I'm using it, but that way when I slide it back into place, you can kind of see how it fits. I have calls and puts. I'm ready to go. and ready for whatever signal I get. Like for instance, if I'm looking at my watching set like this, I know that I can just flip it to my trading charts and be off to the races with my put or calls. Okay, all right. Good luck with everything. Let me know if you have any questions. Let me know if you have any feedback or any potential changes. Anything greatly appreciated. Thanks for watching.